Hey everyone, Luke here in another video. In today's video, I'm going to talk about how you can get started buying rental properties at a young age. A couple subscribers have been asking me, Luke, how do you get banks to feel comfortable enough? Obviously, credit's involved and a couple other things, debt to income ratio, and then obviously your down payment. But sometimes people just literally get rejected, even though you're not going to get it on an actual notice or actually in writing. But sometimes banks just don't give loans to people just because they don't feel like it. So they send you a letter that says you have been denied, and they give you some kind of reason in writing that coordinates to a legal matter or a legal process, when really sometimes banks just aren't comfortable giving people who are young loans. Some banks will give you a loan and deny you. Other banks will give you a loan and you have the exact same credit, the exact same income. One bank says no, one bank says yes. So a lot of people have been asking me, how do you get a bank to feel comfortable giving you a loan on multiple rental properties? And we're going to talk about that in today's video, and we're also going to talk about a few tips on what you should do when you do get a rental property and how you should do your landlord or your real estate rental business, and just kind of a few things that'll kind of help you out, some things that I've learned and what's really important with having a rock solid rental business. Let's go. Hey everybody, Luke here. So in today's video, a lot of people have been asking, just because I am into real estate also, I don't talk about it as much as I do phone flipping, because the rental business is kind of a passive thing. Once you secure a house, once you secure a tenant, it's pretty much on autopilot. Unless you bought, a money pit house. If you guys have never seen the movie The Money Pit, you need to go watch it after this video. It's pretty funny. You can probably find it on YouTube or Netflix. But the movie The Money Pit is about a house where two people buy it. It's a big, gorgeous house, but it has all kinds of problems. I mean, these people live in it. It ruins their marriage. And at the end of their marriage, when they're basically ready to give up on each other, finally the house is absolutely gorgeous. So just quick spoiler alert, don't buy houses that need tons of work. That's how you fail as a landlord. If you buy houses that constantly need maintenance, you're constantly sending workers over there, or you're constantly sending maintenance companies or yourself over there, you're not going to make any money as a landlord. But that being said, let's talk about the first topic of the video, and that is getting banks to be comfortable with you in the rental business. How do you get a bank to look at you as a 20-year-old or 25-year-old or 26-year-old, basically anybody under 30 years old? How do you get a bank to look at you and just say, I'm going to give that guy a loan? How do you do that? A lot of people have been asking that. Well, there's a few principles that I have followed that I think really, really, really make banks feel comfortable giving me loans on new properties. So, first and foremost, the biggest and most important tip that I will give in this entire video is pick your bank wisely. And when I say bank, that's the whole pun of this tip. Is it's not always necessarily good to go with a bank. Perhaps go with a credit union. Credit unions are typically smaller organizations. They're more personable. You go in there 4 or 5 times, as long as you're actually doing decent business every time you go there. Most of the tellers are probably going to know you by a first and last name basis, and they're going to be able to pull up your account without even having to pull your account number or anything like that. They're just going to know you because they recognize you and they're personable. So I want to share a little experience here. And, for those of you guys out there that have these banks, there are reasons to have big banks. Sometimes when you travel, credit unions are not available. So I do have accounts at bigger banks just for the sole purpose of when I travel. Obviously, you need to have money or a credit card accessible or a debit card through a bank that's going to be everywhere. But if you are buying rental properties in your home area, I highly suggest you find a credit card in your area through a local credit union and build your credit, build your reputation with that credit union. If you have the credit union picked out and you really like them, but they don't offer a credit card, maybe step it up. There's probably a credit union in your area that has a little bit bigger organization where they do offer a credit card. Some credit unions are that small, they don't even have their own credit card. You don't want that small. You want a credit union that's kind of middle of the range. You don't want a big giant bank like Wells Fargo. In my opinion, Just from personal experience, Wells Fargo was an absolute nightmare to deal with, and I'm going to share a quick story on that. So, flipping back to times, back when I was like 18 or 19, I was working in North Dakota in the oil field. Now, I was a very highly paid laborer. I was making around, I think it was like $30 an hour or something, working 60 to 70 hours a week. Basically, through all the stuff that I was doing in North Dakota, with how much I was working, the amount of money that I was making, I was only 18 or 19 at the time. It was like right in between that range, and I was a high school dropped out of high school and everything, and I've been working for a while. I was basically bringing home like 8 to 9 grand a month. Now my credit score, I think, was like a 650, which isn't really high, but it's not bad at all for somebody who is 18 or 19. I didn't have any debt, any kind of bad credit history, no missed payments or anything like that, no delinquencies on my credit report. And I remember I went to Wells Fargo and I wanted to bank with them because they were a big bank and I felt like I was making a lot of money at the time. And in my opinion, to bring home $8,000 to $9,000 a month from a single job is quite a bit of money. So I went to Wells Fargo for the sole purpose to make an account there and to get a loan through them so that I could build credit. I wanted to get my credit score to like 750, 800. I wanted to start building this as soon as possible because I knew credit was really important at a young age. So I walk into Wells Fargo, open an account, I fill out all the paperwork, and I'm making basically, at that rate, I was basically making close to like $120,000 a year on the books. I mean, everything's legit, right through an employer. And then on top of that, I did own a 5-bedroom house in North Dakota, and I rented out 4 rooms in that house. And for those of you guys that don't know about the oil boom back in like 2012, 2013, and then a few years prior to that, rent was absolutely insane. So I had 4 rooms rented out in my house for $900 a piece with everything included. And they pretty much had the whole other side to the house to themselves. And then the master bedroom in the house was basically a 20 by 20 room, which had its own bathroom off of it, and it was right off the kitchen. So I didn't really have to see them or anything. Plus I was working like 60, 70 hours, sometimes 80 hours a week. So I didn't really have to see them. But the point is, basically, all in all, I was bringing in like 12 grand a month. I was at over $120,000 a year. And I went into Wells Fargo, and if I remember this right, I applied for a $2,000 personal loan, okay? And here's what I didn't like about Wells Fargo. Time is money. I don't like when people waste my time. And I went into Wells Fargo, and I was making good money for my age. Probably, I was making better money than any person I knew from high school, anybody that I knew that age, in my direct friend group and even my outer friend group. And I was doing very well, and I asked them for a $2,000 loan, right? So think about that, guys. $2,000 isn't that much. If somebody asked me for a $2,000 loan and I was going to make decent money off it, and, I had all their job information and I could garnish their wages, etc., and I didn't really have much to lose, I would give somebody a $2,000 loan. It's not really a big deal. So that's why I did that. I thought $2,000 in my mind, hey, I make that in a week or less. It's not really a big deal. So I'm going to shoot low, try and get a $2,000 loan through Wells Fargo. I know they're a big bank. And at the time, I thought great of Wells Fargo. I didn't really know how they operated. And I put in my application for the $2,000 loan. And the thing that I didn't like is I had to submit an application and everything with somebody, sit down. So that took 1 day of my time. And then after that, they had told me that it would take 3 days for them to review it and approve it. So after wasting 1 day of my time, getting my hopes up, and then waiting 3 days, Wells Fargo denied my loan. They denied a $2,000 loan when I literally opened the account up with around $25,000. So I had $25,000 in my account, and, I showed them all of my income, showed them my pay stubs, etc., told them about the house and the rental stuff that I had going on. They denied a $2,000 loan. Maybe it was because I had never really had any loans before. Up until that point, I pretty much had paid cash for everything. Didn't really have any credit cards, I was making a lot of money. I was young. I didn't know a ton about credit other than the fact that it was kind of important. And the point is, they denied me on a $2,000 loan. So that's when I became really frustrated with Wells Fargo because they wasted my time and I didn't really understand the justification of their denial on the loan. So at that point, I went out and I looked for a credit union. I found a credit union down there in North Dakota, and I went and got a $2,000 loan. I went in there, told them who I was, told them what I was doing, started an account, put a large amount of money in the account, and then I asked for a $2,000 personal loan the next day. And within a 10-minute phone call, the loan was processing, and then I got a phone call an hour later saying your loan is done, you can come pick up your money. And that's how it was done. And so let this be a lesson to everybody out there. If you are struggling finding financing for a flip property, a home, or just a rental property, my advice is go through a credit union. Not a small credit union, but like a moderately large credit union. And if you guys do this, if you guys work with a credit union, you're going to see really, really, really good results. And not to mention, if you work with a moderately large credit union, you may actually be able to match some of the rates that the big banks give while saving on all the account fees and the stipulations that they have at the big banks. Now, one pro to the big banks is Wells Fargo is everywhere. Will I ever use Wells Fargo? Probably not. The funny thing is, now that I have all that I have all this stuff going on, I get letters in the mail from Wells Fargo all the time asking me to open an account and, hey, come see us for financing. I don't want anything to do with Wells Fargo because you wasted my time, and I will never, ever waste my time again at Wells Fargo. Absolutely ridiculous, and I really thought the whole process was completely redundant and a big waste of time. That's just my personal experience, my personal opinion. Now, when it comes back to credit unions, here's the thing, guys. If you start working with a credit union, not only will you get great rates, you won't have a ton of fees, but on top of all of that, when you start developing a personable relationship with your mortgage underwriter or the person who is the home loan officer in the branch, when they start knowing you by your first and last name and you've got their personal cell phone number like I do, you're going to be able to get loans a lot easier, because when underwriters try and chew up your loan or try and give you problems about it, your home mortgage man or lady, whoever you are working with, who you've got this kind of personable, small town credit union relationship with, even if you're not in a small town, if you've got that personal relationship with your banker, with the person that writes the home loans and then sends them off to underwriting, you are going to have a much higher chance of getting these loans if your home loan person is on a personal level with you and they're pushing for you to get the loan and they're supporting you. And every time underwriting says, well, his credit's 2 points short, well, they're going to kick back and say, look, the guy's got 4, 5, 6 properties. He doesn't have any delinquent payments. Just give him the loan. He's a good member of ours. They back you 100%. Now, you walk into a big bank and underwriting says denied. The person over at a big bank that you don't know, they don't know who you are, you're just a number, you're just an application, they're not going to do anything with trying to get it reapproved. They don't really care. They're just going to move on to the next one. So it's just my personal experience. So number one, biggest tip in getting involved in actually buying rental properties at a young age is pick the right bank. Choose your bank wisely. And in my opinion, I think you should choose a moderately large credit union. And then when you do get your first home or rental loan, try and kick it off good with your home loan writer. The person who basically processes the home loans and sends them off to underwriting, you want to have a good personal relationship with them. The person that does all of my home loans, I offer to buy him lunch all the time. And I have his personal number. I mean, it's like we're kind of like friends, like we'll be sitting in his office, and he'll even start swearing, not at me, but just in general. I mean, he talks like he would outside of the office. We are friends. He doesn't feel like he can't say something. He knows he can tell me whatever he wants. If he's got something to say it. He doesn't have to sugarcoat it, because I'm not just some client that he's never going to see again. We talk all the time. And he's even presented me business opportunities. Something comes along his desk where he hears of a situation. He's like, I think you could benefit from this. Boom, he sends it my way. That's the kind of relationship in this industry that is completely priceless. It's not always about what you know, even though that is important, but sometimes it's about who you know. And me knowing him, starting a good relationship with him, is definitely helping me getting more and more homes. Now, a couple other tips that are really important is, one, you got to have good income. If you don't have good income, you're not going to be able to get a home, because banks are going to look at your debt to income ratio. So, example, if you have a $600 car payment and you have a $1,100 rent payment and you have a $300 credit card payment and you have another $100 credit card payment, you have a personal loan for $200. Let's just say you're close to like $1,500 to like $1,800 in monthly overhead or debt going out each month, and your income is only like $2,800, the bank is probably not going to approve you, because of the fact that you getting a new loan would put you way over 50% debt to income ratio value to the loan. So you need to try and keep your debt down, but you also need to build your credit. Credit is important. You do need to have a decent credit score to be able to qualify for a loan, especially through traditional financing. So those are basically kind of two big things, is debt to income ratio and then your actual credit score. You see a lot of people think that you need to have a ton of debt to build a credit ratio or a credit score, and that's not true. What you need to do is you need to keep all of your cards really low, but basically use them every month and then pay them off before the statement balance. Or once the statement balance hits, pay them off as soon as it hits. Like what I do personally on some of my cards, I'll either just pay for my gas with them, or I might just buy like a case of pop or, maybe a coffee with them here and there. I make sure my credit cards are just sitting at like $10 a piece. And if you don't believe me that this works, I got a little experiment for you. Next month, put everything you buy on your credit card and let that statement balance hit your credit account. Me personally, I use creditkarma.com. It's a really great free way to monitor your credit. And I did a personal experiment. I have one credit card that I use through my credit union, and I maxed it out. I basically maxed it completely out and actually somehow went a little bit over the limit. And when that thing hit my credit report, it dropped my score 30 points just for having the credit card maxed out on the balance, even though I paid the credit card off, and I do every month anyways. So that's just kind of some knowledge for you right there, that it really does make a big difference. And so then the next month I paid the card off in full, it hit my credit report, and my score went back to normal, went up 30 points again. So that's something to keep in mind. So some of the biggest things is choose your bank wisely, make sure you are building your credit, but keep in mind that you need a good income, and with good income comes decisions. You got to be smart with that good income. Make wise decisions with the income. Do not overspend and do not overexert your income. Do not rack up a bunch of payments just because you can, because when you go and try and get a home loan and try and get a couple rental properties, if your debt to income ratio is way off, they're not going to give it to you. Now, that's one of the best ways to start getting rental properties. Now, one of the biggest ways to make a bank feel comfortable on top of all that stuff, and this is one of the other big ones, is you need to basically work for the bank. And you're probably asking, what do I mean when I say work for the bank? What I mean is, if I told you I was going to sell you this bottle of screen cleaner, okay? I'm going to sell you this bottle of screen cleaner, or more or less, let's pretend you're the bank. I want a loan for this bottle of screen cleaner, okay? It's really nice, works and everything. But this bottle of screen cleaner is only worth $20, and I want a loan for $25. The bank's not going to want to give you money because they don't want to get stuck with this item. They don't want to get stuck with an item that they're not going to be able to sell. So what I've done with all my rental properties, let's just pretend the screen cleaner here is a home. This home right here, when I go to try and find a home or finance a home from the bank, if this home is $150,000 on sale right now, I try and make an offer for $140,000. However, even if I don't get the low offer on the house, every house that I buy, I try and make sure that it's going to basically appraise around $15,000 to $30,000 more than the asking price. And you probably ask yourself, how do you know if the house is going to appraise out for higher than, what you're going to be buying it for before you even go through the bank? So what I do is I basically hire a third-party property appraiser, and I get a private appraisal before I even try going to the bank about it. So basically, before I even go to the bank, I know that I'm going to be well above the purchase price. And so what that does is, when I put the minimum amount down, that is going to give me instant equity in the property. Now, it's not going to matter so much when I actually get the loan, but when I keep this property for a year, keep up to date on the payments, next year or the next 6 months from then, when the bank looks at my debt to income ratio and my assets, and they see that I have a house that appraised at $170,000 and I only paid $140,000, and then I also put $10,000 down, so I only owe $130,000 on it, that's a huge deal. If you have more than $20,000 equity into a home every time you buy one, that's a really good thing for banks. And it also shows them you have a track record of, one, making your payments on time, but two, You buy houses that you rent out, that you cash flow, and you have equity in the properties every time you buy them. You basically want to be working for the bank. So think of it like this. You want the deal to look good to the bank. Why would the bank want to buy a house that, basically appraised at 125 and you're buying it for 125? You want to basically make them feel like if you lost the house, you want them to feel like they're going to win big time. You want them to feel like if this guy loses the house, we're going to, make 20 to 30 grand off of this guy. Now, of course, you don't want that to happen. You don't want to lose your house. You don't want to forfeit it back to the bank or go through foreclosure, etc. But the point is, you want to make it, as far as the numbers, you want to make it so that the bank thinks that they're going to win if the tables turn. If you lose the house, worst case scenario, you want to make the bank feel safe. If you do this every time, and you follow the other things that I said in this video, you're making the bank feel really, really comfortable giving you a loan for your home. So those are some things that you guys have to consider when you're trying to get a home loan. If you do these things in this video and you apply them and think about them, use them in your local market, I think you'll have a really good shot at getting a home. Another thing you can do is check into government loan programs, such as FHA loans. Sometimes you can get loans where you only put 3.5% down. Sometimes you can qualify for loans where you don't have to put any money down. Absolutely crazy. So there's lots of options out there, lots of things to explore, but these are just some personal tips from my own experience and some things that I've learned from my uncle, who has been a multimillionaire in real estate since 1989. So these are just some personal things I've went through and some things that he's taught me. And then one other tip I'm going to give you, just from my own personal experience and just stuff that I've seen my uncle go through. Biggest thing to becoming a successful landlord is two things. One, get a good deal on the house. Don't buy a lemon. And then two, okay, those two kind of go hand in hand. The whole two tips that I just gave there. Find a good deal and make sure it's not a lemon. That's what we should say. Tip number one, find a good deal and make sure it's not a lemon. If you do those things and you can jobble those into one, you will be safe. But then what you need to do, this is kind of like, it's like a two-step process, so make sure you get a good deal, and it can't be a lemon. If it's a good deal and it's a lemon, that kind of cancels out the whole point of it being a good deal. So it's got to be a good deal, and it's got to be a good house. But the biggest thing after that is find a good tenant. The awesome thing is, it's really easy to find good tenants nowadays because of the fact that we have Instagram, Snapchat, Facebook, etc. We have all of these social media outlets where you can find out all this free public information about people, and you can see exactly who you're renting to. Me personally, anytime I try and rent to somebody, I make them fill out an application. They enter in their financial information. They disclose what credit cards they have. I run a credit check on them. I run a background check. And then I also search their first and last name on Facebook and Instagram. I want to see what kind of person am I renting to. If you've got a job and you're in school, that's awesome. But if I look on your Facebook and I see that you throw parties every weekend and you like doing drugs and drinking crazily, probably not going to rent to them just because of the fact that I don't want my place trashed. I don't want to have to risk taking their security deposit and having to do a full revamp on the property when they're gone. So my best advice is, when it comes to having a successful rental property business, like actually cash flowing each month, make sure that you are getting a good deal on the place that you're buying, that you're going to be able to cash flow on it, not have a ton of maintenance issues. And then two, find a good tenant. If you don't find a good tenant and you get a lemon tenant, you get somebody that's terrible, or they just move in there and stop paying rent right away, it can take your rental business and send it on a downhill spiral very fast. So that being said, for everybody out there who's been asking, how do you get comfortable, how do you get banks feeling comfortable giving you loans? What do you do exactly? I hope all of the personal tips and experience in this video help you. These are some things that I have done, and I think that they would benefit you if you go out there and you try them. Just do some knowledge on your local market. Obviously, everybody's markets can be a little bit different, but this is what's worked for me, and so I'm just giving you my personal experience on everything that I have done, been through, and tried things that work, tried things that don't, and these are the things that have led to my success with this. So that being said, thank you all for watching. Thank you for supporting the YouTube channel. Make sure you guys smash that like button. And if you are not already, hit that subscribe button. Make sure you join the notification squad. We are doing basically a video a day every day in 2019. And if I do not do that, I will be giving a random subscriber at the end of the year $1,000 cash, whether it's in person or online. I will be sending a payment. Another thing we do cash giveaways every 1,000 subscribers. I'm giving away $100 per 1,000 subscribers every time. So like these videos, subscribe, share them, tell your friends to subscribe. It's free money every 1,000 subscribers. All you got to do is be subscribed, pay attention to the daily updates, and make sure you're in on it. So that being said, thanks again, everyone, and I will see you in the next video.